Hello, I'm Donald Leggett. Welcome to our latest Focus IR London South East Investment Trust interview. I'm joined today by Jon Groocock, and he is one of two deputy portfolio managers at Utilico Emerging Markets Trust. And Utilico have delivered an annualized total return of 9.3% over 17 years and currently pays 3.8% dividend yield. Welcome, Jon.
Thank you for having me, Donald.
It's a pleasure, Jon. It's a pleasure. Now, let me start by asking you what your background is and which part of the Utilico portfolio you look after.
So my background is in electrical engineering, and then I spent 9 years covering European telecoms for equity research. And then I joined ICM 12 years ago, and which I joined to cover the utilities sector.
Okay, and what are the utilities that you invest in? If you could talk us through utilities, talk us through the areas and the countries that you invest in. Give us an overview of what your sector consists of.
Yeah, so the utilities that we invest in cover all the household services you would expect. So water, sewage, gas, electricity connection, and then the whole value chain that supports that from transmission and generation. And UEM invests across the base and in many different countries, predominantly emerging markets and some frontier markets. Brazil is our highest weighting in the portfolio at 25%, and we do invest in several utilities there, predominantly in the transmission sector.
And an obvious question, but a useful one nevertheless. Why do utilities companies make good, stable, long-term investments? And which companies are playing those particular trends that you mentioned well?
Yeah, so utilities make great investments because they typically operate in strong regulatory regimes. So you can be confident that if you invest the capital, you can make the return because there's a regulatory regime. And across most emerging markets, you have very well developed regulatory regimes that support this. And if you look at the utilities across emerging markets, a lot of investment still needs to go into these countries. So if you take, for example, transmission grids, you have this investment in renewables that requires a lot of transmission to extract the electricity and deliver it to the consumption bases. And so there's a lot of different areas which do require investment. People are using more energy. And so we like the investment environment provided by strong regulatory regimes. Okay,
strong regulatory regimes. Let's pick up on that point. Why are those important?
Well, they're supremely important because if you want to be certain that you'll get the return, you need that regulatory regime to tell you that's what you're going to get. It's the same as having rule of law. If you're not confident in the rule of law, you're not confident that you'll get back what you're contracted to receive. Places like India are very good. So if you have a regulatory regime, they allow you a return on equity of typically 15.5%. And that's been in place. It's a 5-year review, and that's been allowed at each of the reviews the last several times. So we've had several cycles of resilient returns. And then if we swap over to Brazil, again, as an example, in the transmission network, you're getting regulated revenues. So companies will bid for a transmission project, they'll implement it, and then they'll get 30 years regulated revenues, fully inflation protected. So these are great assets.
So let me take you onwards a little bit and I ask you about the main trends, the mega trends as you describe them, which are driving growth in your sector of the emerging markets. So talk me through what are the main mega trends as you see them.
So the biggest mega trend affecting our sector is energy transition. And we're seeing the move to decarbonize energy supply because a lot of these countries have been very reliant on coal and shifting to gas. But of course, now we're seeing a lot more wind and solar. And so that's really the dominant trend across the sector because countries do want to decarbonize, and they might not be able to decarbonize as quickly as we do here in the Western world, but it is on the agenda. And again, take a place like India. By 2030, they want half of their energy generation to come from renewables. And that's pretty ambitious. If you think about the amount of thermal coal-fired plants India has, to switch so much over to solar and wind, that's a big ask. But they're well on the path of doing it. If you take Brazil,
what about China?
Well, China's on that path too, and I think it's easy for us sitting here to say, well, they're still burning a lot of coal, they're still burning coal-fired plants. They are, but they are also the biggest investors in renewables in the world. So they are investing heavily in solar, in wind, and every year they're adding more and more gigawatts, and they're moving, the passenger base towards electric vehicles. They are investing very heavily, and yes, there are municipal governments still building coal-fired facilities.
I'm so sorry I interrupted you. You were just about to mention Brazil, so let's go back to Brazil.
Yeah, so if you go back to Brazil, that's a country which is pretty much already there. They've got such a good hydrological base that 80% of their electricity supply already comes from renewable sources, mainly those big hydro dams that you see. So actually, they're a long way on that journey already.
And presumably different governments have different ways and different policies to get to the same end point?
Yeah, and the end point may be in different timescales. So 2060 or 2070 rather than UK net zero 2050. And they'll have different ways of doing, because it depends on how their country is set up. Because if they have oil and gas resources, then clearly they'll plan to use those along the way. Whereas other countries which don't have those resources will want to de-link quicker because they want that energy security.
Okay, which takes us to another of the megatrends, the waste and water solutions which support population growth. Which emerging markets countries, which companies are doing this well?
Yeah, so many developing nations require a lot of investment, particularly in sewage. Most countries have got there with tap water. It's on the agenda for India. They're trying to get every household to have clean water, clean running water. But sewage is really the big one that is still lagging. And then also waste collection. And if you take a country like Brazil, you've had 40% of waste just being dumped illegally. So effectively taking the garbage and chucking it in a field, which is terrible for the environment. And so the government's put in legislation that says this has to stop, and all the waste needs to go to properly monitored and licensed waste sites and to be treated appropriately. So countries are addressing it, and then that gives us the kind of opportunities that we look for that can benefit from those environments. And so within Brazil, you have Horizon, which is one of our top 5 investments. And they run a series of landfill sites across Brazil. And they are very effective operators. They operate within the legislative guidelines. But they also have the skill set to do more with the waste. So they're not just taking it and sticking it on the landfill. They're putting in a sorting line. So you're getting the recyclable plastic, metal and cardboard. You're taking biogas. You can generate electricity. So there's a lot more you can do with that waste.
And what kind of a return would you hope to get from an investment in Horizon?
So for UEM, we typically look for double-digit returns. And a company like Horizon, we would certainly think that's possible. To give you a small example of the kind of internal returns they get on a project basis, if they put in a gas turbine to burn the methane, to generate electricity and export it to the grid, they'll typically get about 18 months payback on that investment. So the internal rate of return on these projects is fantastic.
That was Jon Groocock, Deputy Portfolio Manager at Utilico Emerging Markets Trust. Thank you very much indeed for giving us such useful insight into the trends and investments driving your returns. For more company information and to access the company bulletin board, please go to the Utilico pages on London South East. And meanwhile, do follow us on Twitter. That's at London South East, and also at _FocusIR_ or register on London South East YouTube to receive alerts to Utilico Investment Trust interviews like this one. Thank you very much indeed for watching.